want to welcome Carole House, who is the CEO of Penumbra Strategies and former White House National Security Council Special Advisor for Cybersecurity and Critical Infrastructure Policy. I'm going to run through kind of the themes that were asked, and then we'll jump into the first question. The current White House administration status, the balancing act between regulators and innovation, AI and digital asset convergent, national security lens, collaboration versus control, and global competitiveness.
All of our favorite topics.
We have only 20 minutes for this. So first question, from your vantage point in national security policy, how does the current White House administration's approach to fintech and digital assets differ from previous ones in tone, priorities, and willingness to engage?
That's an interesting one, because I do feel that there's been some level of fracture and consistency across many administrations focusing on fintech policy. For example, under Trump 1.0, when I was at FinCEN, which is the U.S. anti-money laundering regulator at Treasury, it was widely reported how President Trump was very much not a fan of cryptocurrency and even potentially was pursuing ways to ban it. But also at the same time, we drove the adoption and creation of the first ever standards for virtual assets at the FATF, or the Financial Action Task Force, which is the international standards body for AML. And I was FinCEN's lead delegate to it, so we worked on helping to create some of that regulatory clarity of expectations and standards internationally on how to stop illicit actors' exploitation of crypto. Then under President Biden, we issued the first ever executive order for digital assets, which included an acknowledgement of the risks, focusing on responsible innovation, trying to drive a competitiveness strategy, and the first ever strategy from the Department of Commerce, which I know is in the room right now, one of the key architects of that, to do things like driving R&D and standards work in crypto, but then also seeing some guidance from banking agencies and others that seem to be very counter to wanting some of the more traditional players to play in crypto. Then certainly under the current administration, where I'd say in the term responsible innovation, under the Biden administration, I think the word responsible was in all caps. Under this administration, the word innovation is definitely in all caps. So a major focus instead on, certainly they've created an AI and crypto czar in the White House, and he's been focusing a lot more on trying to make sure that we create an environment for competitiveness for the U.S. At the same time, we're dismantling a lot of the enforcement apparatus and firing regulators. So while we've created some historic legislation and frameworks for things like stablecoins, which is critical for U.S. competitiveness, we've also been dismantling some of the apparatus to ensure some of the responsibility there on that side, which creates an opportunity for industry to step up to be some of the experimenters and the creators of standards and other R&D. But I think there's some interesting tensions across many administrations on fintech policy.
Amazing. And kind of that's a good segue into how can regulators encourage fintech innovation without compromising financial stability or national security?
Oh, this is really a critical one, because I do think like the U.S. is still such an amazing place to be the home of innovation for technology and in finance. We have a rule of law that is believed in. We have really liquid capital markets. We have an incredible technology apparatus, and just really secure and trustworthy financial systems. So that is a really great standing upon which to build and to allow fostering innovation in the ecosystem. I'm concerned about certain trends around dismantling certain enforcement capabilities, and if we don't put in place some of the stronger guardrails, what that will do. But I think that that's where startups, and especially what a wonderful place to create the competitive advantage that I know Dante was kind of speaking to earlier, the competitive advantage that startups that are either based in DC or focused on the DC environment have. Because I think that right now, the next age of fintech innovation is going to be about building on and leveraging this trustworthiness index. Like I think, especially now with the passage of the Genius Act and digital assets, with a lot of experimentation that's happening in AI, where some of the challenges that you have with these technologies are because of some of their nascency and the development of the more complexities of the system, things like built-in pro-cyclicality, like that can be automated, which can be good, but also really bad if things start happening in a bad way, like that presents potential stability risks. On the national security side, we see the issue with cryptocurrency. One of its features that creates resilience against cyber criminals from taking over the network and targeting it also inhibits resilience on being able to recover from breaches. Like, I don't know, I'm gonna poll the audience. Who here knows that the largest heist in history occurred earlier this year? Awesome. So a few hands. The largest heist in history occurred earlier this year in February, where North Korea stole $1.5 billion from a cryptocurrency exchange, and we have recovered very little of those funds. That is a problem from a cybersecurity perspective and from an illicit finance and recoverability of assets. These are solvable problems. We can work together, and this is where startups and innovations in tech and operational solutions can help solve these. And I do think that DC, which is the hub of national security-minded professionals, some of the best security firms and people are sitting in this room right now, I think that kind of policy and security mindset needs to be injected into some of the move fast and break things, the ecosystem sometimes of Silicon Valley. So I think DC is a great place to hone that kind of innovation.
Amazing. And we can't talk about innovation without talking about AI. So what are the biggest emerging risks or blind spots as AI becomes embedded in financial technologies?
And AI is a really exciting one because I think that the tension points between the benefits and the potential costs of innovation are nowhere more present and observable in the technology space than in AI. You have this democratized access to incredibly sophisticated, higher order economic developments and thinking that you get with AI. I know that when ChatGPT was launched, many of you have been building AI, using AI, whether in compliance, in your solutions, operating those companies for years. AI isn't new. One person's logarithmic regression is another person's AI and machine learning. But now what is totally new in this generative context, the advent of democratized access to really, really sophisticated AI. And now where natural language is the user interface, is the UI. English, or any language really, is now the UI. This opens the door for people who are not inherently really tech savvy or coders or programmers to have now access to really, really incredible, sophisticated thinking. So I think that's a wonderful use case that already has been used in compliance and chatbots and algorithmic trading. We've already seen AI used a lot, especially in back office functions. But now we have these risks, again, of automated procyclicality is a huge concern that I have from a stability and a contagion risk sort of issue. The explainability and black box issue is also, I think, really present as a huge concern around where there's bias that can be built into the algorithms towards certainly undesirable outcomes, but also just inaccurate and erroneous findings. So I think that's where there's some blind spots that need to be addressed, but also a really great point that I think helps to highlight the interesting convergence of AI with other emerging technologies. I love talking about this with AI and blockchain, where they converge in very cool ways because they solve each other's problems, but reinforce each other's best and worst traits in fascinating ways, right? AI has this explainability and data integrity problem, right? Blockchain was created for provenance and data integrity. What a wonderful solution to potentially help solve in this issue. Where blockchain has faced scalability issues and compliance challenges, AI can be part of that solution. But also where you have scalability, maybe in decentralized networks where you have lack of clear lines of accountability and responsibility built in, think about scalability on top of that lack of clear accountability with the challenges that potentially presents. If you want to really potentially scare yourself, something that I did in Japan 2 years ago at the FinTech Festival, I pulled up ChatGPT and I was like, ChatGPT, if I deployed you on a decentralized network and you started to operate maliciously or just erroneously, just not even from a malicious vulnerability in your code, but just an erroneous misallocation of assets in a treasury or whatever, could I stop you? Could we take you down? And its answer was fantastic. It depends on how decentralized I am, how good my security is, and how good your authorities are. And I was like, ChatGPT, that's a great answer. That's a great answer. So this convergence of these technologies, I think, presents really cool opportunities, but also we need to think very specifically about the way that they operate, about the kinds of guardrails operationally and technologically that we need to build into them.
Amazing. And kind of shifting to your national security lens, which I think tags to this very well. You've advised at the highest levels on cyber and critical infrastructure. What's the one thing Washington must get right about digital asset oversight this year and over the next 3 to 5 years?
It's a great one, and it's hard for any national security professionals, and I see several of you in this room. It's very hard to take off that national security hat, so sometimes we have to we have to make sure that we're keeping other aspects in mind around things like consumer protection. But I do love the national security lens because I think it's one that inherently demands balance, and this was demonstrated even in the Biden administration. When I was at the National Security Council twice, we saw this very present challenge of the fact that digital assets is a great example of the fact that like this technology remains the primary use for cyber criminals to conduct a lot of their laundering activity, right? Like that is not an accident. That is not an inevitability because as technologists and national security professionals, we understand that I don't know why all these criminals are publishing their transactions on public, unobscured ledgers. I hope they do it forever. I hope all criminals decide to take an approach of radical transparency. I think that's fantastic. The problem is that if we don't have a comprehensive, interlocking ecosystem of compliance and controls, then even being able to trace where the transactions are, if that's sitting in, if it's an alphanumeric string, representing the public address and wallet, where these assets are, if I can't get a hold of them, how useful is that to me, really? And then, of course, there's lots of obfuscation measures that are coming in place to make it harder for national security professionals. But then there's also the competitiveness angle that was first and foremost in our mind as well. Like we see the fact that we have alternative payment systems being pursued by a lot of our adversaries on the geopolitical stage. So this broader issue of like trying to figure out what is the right balancing act between stoking innovation, making sure that we are not that we do not allow for the hubris of believing that everyone will sit and wait for us, and that we are jealously guarding the amazing economic benefits and national security benefits that we get from the U.S. being playing this incredibly central role in the financial system. That is something that we recognized what the challenges are that come from DeFi when all of a sudden you, between Lira and Renminbi, if you don't need to go through correspondent banking and US dollar accounts anymore, what does that do to my ability to leverage sanctions or to get visibility in the anti-money laundering world? But also, you potentially also get the benefits of extending the dollar if US dollar denominated and properly regulated and secure stablecoins allow for the extension of the US dollar. That could expand reach. Now that presents some other interesting economic questions that also impact national security. So first, just saying that a holistic approach must be adopted. I do think for DC specifically, thinking about things like making sure that there are clear guardrails, that clarity of regulation to know how to operate and what is the North Star on making things secure and recoverable, including for when people get robbed and when consumers are defrauded. No one likes getting robbed. So I think that from that perspective, things like cybersecurity and things like anti-money laundering framework, and then making sure that you have the ability to oversee iteratively and often, because that's what you need to keep pace with the current scale of the amazing innovations that are happening in this space. Those are some of the key pillars, I think, cyber, AML, and then focusing on making sure that you have the oversight apparatus.
Amazing. And leading into that, how can agencies, innovators, and investors work together more effectively? What's missing from the current dialogue?
Agencies, innovators, and investors. I love that you included investors because so there's two key sectors that as a regulator that I know I and many others really looked to often to get an idea of, hey, how are we doing on assessing risk in an ecosystem, in a market? Investment and insurance. They are naturally in the business of hedging and assessing risk, right? How are they doing in this sector for being able to assess and understand and manage risk? Unfortunately, I don't think that we have a great news story for digital assets so far. There has been some maturization, though, so that is good news. But unfortunately, we saw lots and lots of money going into this space without really good due diligence practices that was happening. There were lots of pump and dump schemes that were funded, certainly major cybersecurity issues that existed, the kinds of things that normally we would look to the insurance space and the investment community to expect and demand of companies that they would invest in. So that's, I think, a really great opportunity. And I'm excited, and I'll dare to be optimistic about some of the positive trends that have been happening on that space. But I think that the absence of there being and I know standards is not, it's everyone's favorite word to say in DC, and me too, I will defend it day in and day out. Basically, there's a lot of standards that already exist that have not been implemented at scale across parts of the fintech ecosystem. This includes AI as well as digital assets, whether it's the NIST privacy framework. I've never seen anybody use that and apply that in the fintech space, and especially not in digital assets. And then also, like, there's the cybersecurity framework and the secure software development framework. Neither of those have I seen being clearly and systemically adopted across the ecosystem. I think that some of those are some of the basic parameters for due diligence and making sure that we're meeting some basic barometers of this is what maturity looks like in digital finance. And what we expect when you choose to get in the business of handling other people's money, we expect a higher level of security and responsibility.
Great, thank you so much. Let's position or switch to global competitiveness. You mentioned South Korea and the renminbi. How do U.S. regulatory decisions today shape our position relative to Europe and Asia in the global fintech race?
It's, again, I think there's one of some tensions and some fracture, but we certainly saw where with the MiCA framework that in Europe, and also Europe has really been more front-running on some of the establishment around technology standards and regulation. I think there's some good reasons for that, and also some good reasons why the U.S. hasn't been at the forefront of a more national framework around things, like we don't do national cybersecurity regulation. We do it by function. Like if you are a healthcare provider, that's how we regulate you, including measures like around cybersecurity for financial institutions. Like we tend to regulate not the technology, but instead the function, because it's that activity that is high risk. I think that in the U.S. we've had some tensions and issues on trying to figure out how do we regulate these really innovative and emerging technologies that present some fascinating scaled risks at a much higher speed, that in Europe they've been much more willing to adopt, but which I think unfortunately in some cases has stifled and smothered some of the innovation early on. So there's us being behind on creating things like a clear pathway into regulation and oversight that we desperately needed and that many of us fought for the past 6 years in areas like stablecoins, because we don't have a payments charter in this country. We should, and that's how we should have covered them in the first place. But that, so I think that that's where we were behind, but the fact that we're mostly approaching these things now from an activity-based regulatory function and risk-based versus one that's specifically regulating the underlying tech, I think that will create an opportunity for advantage here. And again, the U.S. can still leverage the fact that we are the home of such amazing technological innovation, amazing liquid markets. And so I think that there's some great things that we can build on top of. In Asia, though, there's just this huge influx of experimentation and R&D that's been just absolutely happening unmitigated. So we need to be thinking about that and looking to where, again, alternative payment systems and technological infrastructure are being adopted that go outside of our reach, our visibility, that are not implementing things like democratic principles built in by design from the beginning. That's something that does concern me because their regulatory frameworks are not as strong and safeguarded as ours. I'm also worried just about us dismantling enforcement. If we have rules that are not implemented, it's pretty feckless. So I'm kind of worried about where some of those tensions will come in as well.
Understood. Thanks for that. So your key takeaway, we have about 2 minutes left. If there's one principle or mindset you hope everyone here carries into their own work after today, what is it?
Vigilance. I know that sounds like a national security professional. That's only because I am that. So it's highly predictable that I would say, but vision and vigilance. So I'm sorry that's 2 words together. I think that's what you need. Any frontiersman had to travel out west, having both vision but also vigilance. Like those who did not protect themselves or defend themselves and make sure that they were prepared and ready for systemic shocks and security issues, like they would find themselves being exploited or other worse things that were happening. I think that you need both. You need to don't ignore these amazing emerging technologies. Figure out how to use them and leverage them and integrate them into your systems. Also engage early and often with the regulators and policymakers. If you are here in DC, what an amazing location to be, and with an administration and with a city that is so interested in embracing these technologies, it's a wonderful place to be that can allow allow for you to figure out what is that competitive advantage for, again, the trustworthiness index that I think is going to win now that we've opened the door to some of the more like adults and the traditional financial players to engage with these emerging technologies. I do think that this is where, okay, people that are very used to operational risk, systemic risk mitigations, things like cybersecurity and AML, they are coming to play. And when it comes to money, Americans and consumers are not willing to accept as much risk in messing around with their assets as potentially you can do in just the tech ecosystem. So I think fintech is cool because you have a neat mixing of these technologies together. But I think that like thinking through how you both integrate that vision and vigilance together and leverage the competitive advantage that you get for that trustworthiness factor by being placed here in DC.
That was awesome. Thank you. I'm breathless. Thank you so much. Appreciate it, Carole. This
And
was
thank
so
all
much
of
fun.
you.
Yeah, absolutely.